Good evening. It's Vijay here. Today is Sunday, 16th February 2025. Welcome to a weekend commentary where we discuss issues beyond the day to day movements of the markets. Now, last week was uniformly a bad week across all days. In fact, Nifty closed 8 days in a row on the downward downward direction. So all of a sudden, you all already have lots of market commentators talking about this being some record and the worst fall. And on a weekly basis, they consider it as the worst fall. And some of the commentators, not some, most of the commentators are clear that we are entering a bear market. Technically, a bear market is one where the Nifty or any index falls more than 20%. So, as far as we are concerned, Nifty is about 12 to 13% from the all time highs, which we saw in end September at around 26,300. Now, I've been mentioning that we may see 22,800 to 23,000 as a bottom in the short term. I also think a worst case would be around 22,500 and sorry, between 22,000 and 22,500. Now, I was talking to somebody and who did some calculations based on Fibonacci theory, and he said the bottom, as per analysts who believe in Fibonacci, talk about of 18,500, which is around 50% retracement between 7,500, which we saw in March of 2020, and 26,000 and odd, which we saw in September of 2025. So they say 50% retracement is coming to around 18,500. So that is the next target. Now, I do not have any quarrel with people who do their own analysis through either Elliott wave or Fibonacci or trend lines. But my experience tells me that these drawing up lines or drawing up ratios need not always come out exactly that way, because even in Fibonacci you have 50% retracement, 33% retracement, 67% retracement. So one can always say the market may go somewhere close to one of those lines, and people say, see, I told you so. What I can tell you by experience is this: purely on fundamentals, today Nifty I'm talking about is trading at around 20 PE. This is the trailing 12-month PE. So if you take forward PE, maybe you can add another 10% growth. So 10% growth will come to some 18 PE. Even if you take trailing 12-month PE of 20, then you see generally the market, not sorry, the last time the market bottomed out in 2021, June of 2021, was at around 19 PE. So which means you can say about another 200 to 500 points you can expect a downward drift. That is how I made my calculations, that we may see between 22 and 22 500. 22,000 could be the extreme, but I thought 22,750 is most probable, though it may slip to 22,500. So now it has come to 22,775 on Friday and bounced back. This is the third time it's bouncing back. And quite a few commentators talk about a third bottom doesn't hold. So the next time the market opens lower, as goes there, it will break that number. And especially with some bad news on Reliance, they expect this to happen this week. Now, I don't know whether Reliance bad news will really affect the market so much that it will go to 22,500, but one has to be prepared for all eventualities. Now, if you're going to go to 18,500, then 18,500 will mean that your PE ratio will be around 16 and a half, because the earnings per share as of now is about 1122. Now, we have not seen the Nifty going to 16 PE ratio since they have changed the Nifty in April of 2022. We have not seen it going there. And if you go back also, if you with the change number, we have not seen anything going to 16 PE. So I don't know why and how it should go there, especially with the fundamentals much better than what they were even when in June 2022. You remember in June 2022, everything was going against India in terms of the inflation was high, oil prices were high, and there was a Ukraine-Russia war, which had just started in March. So if you consider that, and it bottomed out at 19, so we are somewhere close to the bottom as far as the PE ratios are concerned. Now, external factors may push it down below that. Now, Reliance is one example, which it can push down the market on Monday. But also look at what is happening on the liquidity front. Now, if you look at the liquidity front, as of now, the DIIs and FIIs are evenly matched. Now, one of the most important things in the market is prediction of liquidity. Now, fundamentals you can predict. You can look at sentiment. You've got sentiment indicators, but there is no liquidity indicator which tells us what liquidity will come into the market in the next 1 month, 2 months, 3 months. Because the prices are dependent primarily on liquidity in the short term and fundamentals in the medium to long term. Then you can apply technicals and you can apply sentiment and then say, okay, we are somewhere close to the bottom or we're somewhere close to the top. So those are all qualitative factors. The quantitative factor clearly is liquidity. Right now, we don't know whether the FIs will continue to sell and for how long they will sell. So that is why we have to be very careful in making some outrageous numbers like 18,500 or talking of 30,000. Some people are talking of 30,000 in the next 6 months. I am unable to, reconcile to either of them, either 18,500 or 30,000. What I'm able to think at this point of time is that the fund flows are equally matched. And even though lots of mutual funds and PMSs are keeping away from the markets are holding stable at around these levels. There is quite a possibility that it may slip. But what we have to look at is, are we in a zone where it is getting fundamentally strong enough for liquidity to enter? Right now, liquidity is exiting. I'm talking of liquidity from the foreign and from the ultra high net worth individuals and from the PMSs and from the mutual funds. So where will they find value? So in my opinion, you will see value around these levels, say 19 to 20 PE is what we should see, because we have seen it in the last, in June of 2022. Believe me, there was no good news in June 2022. It is just that the bad news was absorbed by the market. Today also, we have got lots of bad news on India, but I think that is going to get absorbed sooner than later. Now, the next question is, how long will this downside prolong? One is, okay, we say, okay, it may go to 22,000, 22,500, unlikely to go below 22,000. So how long will this prolong? Now, typically, if you do a study of bear markets in India, previously bear markets used to be around 12 to 14 months. There's the last 12 to 14 months. If you take from 1992 to 1993, there is about 14 months. And then in 98, 99, we had about 12 months. Then we had between 2000 to 2002, we had again around 12 to 14 months. And sideways markets have lasted much longer. If we think right now, we are not in a bear market technically because we are not broken 20% on the Nifty or on the Bank Nifty. Of course, we have done that on the broader indices. Now, the fun thing of broader indices is they break 20%, but they bounce back faster than the Nifty and Bank Nifty. The last bear market, if you may classify it, happened between 21 October till June of 2022. So that was about 3 months in October, 3 months in 2021, and about 6 months in 22. So 9 months. So nowadays, the bear market seems to be of a shorter duration. The next mini bear market, if you may call it, when I say bear market here, I'm saying significantly. Let's say the Nifty falls more than 10%. Incidentally, in the 21-22 bear market, the bearish phase, Nifty fell only about 18%. The Bank Nifty fell more than 20%. But Bank Nifty had just a smallish bearish market because from October 2021 till March, the Bank Nifty fell. So that's about, as I said, 3 months there and 3 months, less than 3 months. So 5 months, the Bank Nifty bottomed out. And then it never came back to that level, even when Nifty came to a lower bottom in June. So what we could say is, going by past experience, even you take between November 2022 to March 2023, we had a 4-month bearish phase. So we are having this bearish phase even in 23 we had a 1.5 months bearish phase. Even 24 we had about 2-3 months of bearish phase in March till June, you could say. So we have not had a longish bearish phase of 12 to 14 months. So we can take it as something like we have a bearish phase for 6 to 9 months. So we are already into the fifth month of the bearish phase, because from October, November, December, 3 months there, and we are in the fifth month. January is over and we are in the fifth month as far as the Nifty and Bank Nifty is concerned. As far as the other markets are concerned, other indices are concerned, we have started our bearish phase from January. So that is why I said, when I talked of Brahma Muhurtam, I said that by June we should be in a better phase, and by August, that is Independence Day, we should be out of this dark phase, which has troubled a lot of us. So now what is required is patience, because what it will do is what they call time correction. The price correction may get over, say, another 1,000 points from here, worst case, unless there's no black swan event. But the time phase is where it will test the mettle of all investors as well as traders. So a time correction can happen. Generally, March is not a good month. March is a time when most people sell for tax purposes. So April onwards, things get improve. So I'm thinking by June, things will be in a much better phase. So which means another 3 to 4 months may be troublesome for the bulls. Even though we have fallen 8 days in a row, we may have some corrective uptrend, but it's unlikely that people will come flocking again. If there's a completely different event where Mr. Modi's trip to US has emboldened the US investors to come and buy into India. If that happens, we will see it, we will follow it, and then we will take adequate action. Right now, I continue to be bullish, and I also feel that there is nothing which is bad in any of the thing, including Mr. Modi's visit to US, for us to worry that our markets will get sold off in a bigger manner. However, the FIIs continue to sell and they hold a lot of short positions, and they are not giving it up as far as the F&O is concerned. Similarly, ultra high net worth individuals and mutual funds and the PMSs are holding, say, 50% cash, and they are boasting about it. So maybe they're right. Maybe the markets won't go anywhere. Markets may go down. It's all things are possible, or the markets may go upwards and sideways. So what I am thinking is that we will have an upward, slightly upward, and a sideways move for quite some time. Maybe by April, when we get the next set of results, which in my opinion should be much better, and we will get a second set of interest rate reduction, and inflation will be lower. RBI is likely to infuse more liquidity, and by April, we'll also know how much of Indian companies will get affected because of Trump's reciprocal tariffs. All in all, I continue to be bullish, and I will continue to buy on declines whenever we get money. We got some money last week. We put that money in the market. We're hoping that we'll get some more money next week. We will put that money also in the market. So whatever you do, I hope it is successful for the week. Thank you for joining me.